The global stock market is worth $109 trillion. Today, U.S. equity markets total over $46.2 trillion in market capitalization. My channel is all about building wealth, retiring early, retiring your parents, building financial freedom. And so as someone who's trying to achieve that, you have to take a look at where the money is. There are 3 places that money is flowing, and you need to accustom yourself into these environments. That's Wall Street, Silicon Valley, and real estate. Let's take a look at each of these avenues of wealth, compare and contrast them, and see which one to choose. When coming to a decision, everyone is obviously in a different situation, and so one environment may be better or worse for one specific person over the other. Wall Street. Wall Street is the financial hub of the US, where the big players of trading, hedge funds, and private equity reside. Based in New York, there are billions of dollars flowing in and out of deals, acquisitions, trading floors, etc. Today, the US equity market totals over $46.2 trillion in market capitalization. Look, you're just a regular person, just like me. And so as regular people, our job is just to catch a piece of that pie, a piece of the wave. You have to get involved with the big boys, and the big boys are all playing in the stock market. We're going to go over in detail how to get involved with the market and how you should approach the market, because there's different ways in doing so. With the wrong approach, you can lose a lot of money in a very short amount of time. So stay tuned and keep watching. Next, Silicon Valley is home to the tech giants and startups that emerge as the best companies serving the US market, and where private equity is pouring billions of dollars to see which startup eventually succeeds and becomes the billion-dollar unicorn that yields them their returns. The pros of getting involved with a startup in Silicon Valley is that if you get a piece of equity and that startup turns out to succeed, you'll become rich. The company will offer you some options as a part of your compensation, and when they go public in the market, that's when your stock prices will go up, making you a millionaire. However, that's easier said than done, and it is extremely difficult and competitive to make a startup successful. It takes years and most likely decades to see the fruit of your labor. After years of working on their startup, thousands of businesses and companies pack up their shoes and realize that they weren't able to get a product that fits the market and that their business has no place in the market, essentially bearing no revenue for all of the hard work they did in the past few years. It's quite brutal and a very high risk to high reward probability here. Next, the third asset class is real estate. We all probably know that one person who got rich off real estate, when they bought it around, the 90s or the 2000s, and, rode that bull market up either onto the crash, or if they were able to survive that, into the pandemic, and experience a significant increase in their net worth. But with real estate, you do need connections. You need to always be on the hunt, finding good deals, talking with brokers, agents, and clients. You need a lot of capital, take on debt and leverage when purchasing your properties. And then to scale, you need to bring in other people and investors to invest with you in order to grow your portfolio. You see, the thing about real estate is that it's similar to the stock market in that there's cycles. There's boom and bust cycles where house prices go up and go down. And timing the market is essential when you're in real estate as well. Just take a look at the recessions or the 2008 crash, when a lot of US homeowners lost their net worth and lost their homes because they couldn't pay their loans. With real estate, you also need to be analyzing whether the market in a certain geographical area is either on a decline or getting hotter as the time passes on. Now that I've talked about all of the 3 asset classes, let's dive into why the stock market is one of the best options. Obviously, there's huge opportunities in each of these markets. I personally am trading and investing, but I do want to start a healthcare startup or product sometime in the near future. But in order to do the latter, I do want to hone in and capitalize on my trading first. With trading, it has the lowest barrier to entry and the highest relative reward. Relative to the risk you're putting on, trading allows you to control your risk, otherwise known as risk management. When starting a startup, you're essentially putting in all of your resources, your time and energy, and so the amount of risk on the table is humongous. You can lose everything trying to achieve success. Real estate is the least risky, but with that also has the least reward when it comes to annualizing your return on investment. When it comes to startup and real estate, you need a ton of people helping you, a solid team culture, and a lot of communication. When learning how to trade and invest into the stock market, which are 2 different things by the way, it only comes down to you and your execution of trades. Trading by definition is a lot more short term, and it's where you try to predict price movements either going up or down. Investing is more long term focused, and you're generally just trying to get in at a good price and hold for the upside. The global stock market is worth $109 trillion. Once again, as a retail trader and investor, your job is just to catch a small piece of the big pie. Now, the two different ways you can approach the market is by either using fundamental analysis or technical analysis. Fundamental analysis is using economic data, earnings reports, market data, geopolitical tensions, etc. to make your decisions. And you're relying on your data and your analysis of that data to make those decisions. With technical analysis, your decision is based off the charts. With a chart, you can have different levels such as supply and demand, different indicators and volumes based on the chart, and etc. So which one should you choose? As an average person in your bedroom trying to invest or trade, you have to realize that you have absolutely no place and edge when it comes to competing in the stock market. You're competing against professional Wall Street analysts and big hedge funds when it comes to predicting the market when using fundamental analysis. Trading is a zero-sum game. That means when you make money, the other person loses money, and when they make money, you may lose money. And so the amount of information you're lacking keeps you at an enormous disadvantage. Wall Street has thousands of people looking at different economic data, models, market forecasts, company reports, insider information, and to think that you'll compete with them and take their money using fundamental analysis is a bold but unwise bet. Your best bet, in my opinion, is using technical analysis. With TA, it's a godsend, and once you master this skill, you can apply it into any market. Every market moves the same and has always been moving the same ever since the market existed. Charts all move the same way, whether it's up, down, or sideways. There are proven principles of how charts move, just like how there's proven laws and principles of human nature, of society, of psychology, etc. These principles and behaviors date back for centuries. There are many people who've made millions of dollars just using technical analysis. There are certain people who've never lost money in any trading month in the past decade. I myself use a timeless strategy that has proven to work over and over again. Here's my trading statistics for the month of November so far. Once again, I use proven principles along with discipline and psychology when executing and managing my trades. This is where I have an edge against billion-dollar hedge funds and Wall Street analysts. And using technical analysis, this is how I'm able to make money part-time from the comfort of my own home. Your job is to find your edge, hone your skill, and you too can become successful.